I don't get too involved. If things go off track, then I get quite actively involved, up to and including the potential termination of a CEO and replacement of some of the management teams, which I unfortunately had to do a couple of times.
Hello and welcome to the latest episode of PWM Family Matters, coming to you from the FT studios in London. Today I have the pleasure of speaking with Rami Cassis, founder and CEO of Parabellum Investments, a London-based family office with an international footprint. Rami, thank you for joining us.
Thank you for having me, Elisa. It's my pleasure.
Rami, you describe your firm as a hybrid between a family office and a private equity investment firm. What does that mean in practice?
I invest my own funds. They're not funds raised by third parties, which is a similarity with family offices. But I also do direct investments, and they're very operational. So I oversee and sometimes get quite heavily involved with a number of these businesses. So that's how I see that there is a hybrid between the two.
And what's the approximate value of the assets managed?
Broadly in the range of, let's just say, 75 to 100 million.
So why do you focus on direct investments rather than investing through private equity funds?
My background is in engineering and mathematical physics. I worked in industry for 15, 20 years across the globe. And most of my roles in my employed career have been in operations or in line management. I've gathered a lot of experience in how to improve and develop companies. It's not always worked, but because of my experience, it feels to me that it makes more sense to be actively involved and to put my experience to work for my own benefit rather than for the benefit of my employees.
And what does active ownership mean to you? So how involved do you get in the day-to-day operations of your portfolio companies?
So the process is we agree a budget, a forecast for a financial year. If things are on track, I don't get too involved. If things go off track, then I get quite actively involved, up to and including the potential termination of a CEO and replacement of some of the management teams, which I unfortunately had to do a couple of times.
More and more wealthy families are adopting this direct investing model. What are the key factors driving families to invest directly rather than through funds?
I think it's a combination of cost and transparency. It's riskier to manage directly, but emulating the makeup of a private equity firm where you bring in operating partners is certainly doable. Family offices are becoming an interesting asset class or investment class in themselves. And by investing directly, you have transparency and clarity over the performance of the asset, rather than have an intermediary or a filter in between you and the ultimate investment.
So family offices are emerging as an increasingly important source of funding for private companies. What kind of unique value do they bring to private companies?
Family offices have a much more positive image in the private sector than private equity firms.
Why is that?
They're not seen to be as commercially aggressive. They're not seen as asset strippers, and many private equity firms are not, but the stigma has stuck. They have the appearance and the image of being, I think, more human in the way that they engage with management teams, and importantly, much more long-term in their views. Quite the antithesis to a PE firm that's seen as, run by bright MBAs, bankers and lawyers who are very aggressive, who'll strip costs to a bare minimum and who'll churn the asset in 3 years. It's a stereotype. I'm not saying private equity firms behave this way, but in the private sector, particularly in the mid-market and lower mid-market, that's the perception. Mm-hmm. Family offices are easier to do business with, and they're people you're more likely to be able to engage with than PE firms.
Parabellum means prepare for war in Latin, so which sounds rather ominous in this geopolitical environment. Do you see the marketplace as a kind of battleground?
The full dictum is, if you wish for peace, prepare for war. Financial independence is what buys you freedom. Mm-hmm. It's a pretty self-evident statement. It's also linked to the notion that I end up risking my own capital rather than a third-party capital. I'm responsible for my own actions. Mm-hmm. And if I made mistakes, and God knows I've made loads, then it's right that I should suffer, not somebody else.
Does direct investing require a greater level of professionalization within family offices, particularly in terms of governance and infrastructure?
I think it requires a greater level of discipline and structure, particularly in the due diligence phase. There are many pitfalls in having insufficient discipline during the due diligence process. There's a whole phase around sourcing deals, which will require the family offices to be staffed appropriately. And then there is the due diligence phase and then the ongoing phase. It will require a change in paradigm and probably a change in the team structure of family offices in order to be able to carry this out.
And how important is it for family offices to develop a strong brand or network in order to attract deal flow and access opportunities?
I don't think developing your brand is necessarily crucial. I think what's important is having an established buy-side network. And by that I mean having a sufficient number of contacts, usually bankers, who will be able to source deals for the family office.
How many companies do you invest in?
Today, 4.
Do you see yourself as a risk taker?
Compared to the norm, probably. And it hasn't always worked out well, but it is quite risky to have investments limited to 4 companies.
Do you think that's because you can afford to take risks because you are kind of first generation of wealth creator?
Probably because starting with nothing means if you're going to get ahead in life, you have to work hard and take risks.
Well, industry research shows that many families start out as passive LPs and then transition to direct investing. Do you partner with private equity firms?
I partnered with a private equity firm once in the UK a number of years ago. That didn't work out very well, and I haven't since, though it doesn't mean to say that I shouldn't. I've only done it once.
Club deals, for example, are increasingly common in the US.
Yes.
What are your thoughts on club deals?
If you're partnering with a number of investors who you don't know, and everybody has a small minority, everything is fine when all goes well, but the second things don't go to plan, you may end up finding that everybody wants to go in a different direction, and then it's chaos. I've seen many firms suffer at the lack of clarity in terms of strategy from the board and potentially investors.
What sectors do you find the most resilient or attractive given today's global uncertainty?
FinTech and PharmaTech. I think both of those sectors will continue to grow, not just because of AI, but because they're typically at the leading edge of innovation. PharmaTech in particular has grown substantially since the advent of COVID and the further investment that's gone into PharmaTech and life sciences, as well as increasing regulation from Europe, the US, and also in Asia in terms of supply chain audits. So consumers are able to identify clearly where their products have been sourced from.
The US market has long been an important source of private equity deal flow. So do you think this is likely to continue, or perhaps you're seeing more opportunity in Europe?
I see. The US has always been the best place to invest and the best place to do business. Not just because of the liquidity of the market, but because of the risk appetite of investors, because of society's approach to money, because of access to funds. And so lots of reasons why the US, even as an economy, has been the best place to invest. But the reason why I hesitate is because of the relative uncertainty that has come out of the US as a result of the current administration. Mm-hmm. And increasingly, surprisingly, it's making Europe look good in many ways because of its apparent adherence to law and structure and governance.
Do you ever feel tempted to dial back risk and move toward more defensive allocations?
Yes, all the time. I don't feel I'm in a position to do that yet. I'm not nearly where I had hoped to be at my age. But yes, certainly at some point. I think maybe not entirely defensive, but a more reasonable mixture of defensive and aggressive investment strategies.
So what kind of return targets do you set for your investments, and how realistic are they in the current environment?
I would say a 3 to 4x return over 3 to 4 years, which is difficult to do consistently, and it's something that I've been able to do on smaller deals, harder to achieve in larger deals, and the instability of the last 5 years, for all the reasons we know, has made it harder.
So do you think it's important to generate investment returns through your investment activities, or is it also important to generate positive impact on the society or the environment?
The investment returns are crucial because without them, you're not able to keep moving forward. If I'm able to find business activities that provide for the betterment of society and individuals, then all the better for it. The first priority has to be returns.
What are your long-term ambitions for your family office? Do you hope to open it to other family offices?
My immediate focus for the next couple of years, let's say, is really to drive returns on the existing investments. Having said that, if there is an opportunity to work with other family offices or individuals or family who I'm close to or I know well, then I'd be very happy to consider it.
Thanks so much, Rami. Great to have your insights.
Thank you for your time.
Thank you.